It still looks too optimistic to me, Jeff. You would have the fastest recovery to pre-recession levels for 50 years following a UK recession if the bank's forecast today plays out. A end of 2021 return to Q4 2019 output is about a year and a half earlier than we have in our forecasts. I think the scarring to the UK labour market will be more significant. There'll be a significant rotation of capital and labour to the new patterns of economic demand, and that all takes time. And so I think although versus the May scenario, of course, it wasn't a forecast back in May, this looks slightly more upbeat near term. I still think it's too optimistic medium term.
I mean, it's almost as though the bank wants to have its cake and eat it, because even as they've given us something that looks a bit more positive, in the commentary, they talked about risks continuing to be skewed to the downside here. I mean, I just wonder, as we look at where they're pointing to weakness at this stage, what the remedies might potentially be, because rates remained on hold. They still haven't really broken cover on negative interest rates. So where does that leave us in terms of further support for the economy?
Well, I think you're right to mention negative interest rates. There was 3 or 4 pages in today's monetary policy report on negative interest rates, but you could argue that the MPC bottled it in terms of providing a clear steer. I think that would probably be an unfair criticism. I think there are many iterations of how you could do negative interest rates with tiered deposit rates to try and protect profitability in the banking sector and try and improve the transmission mechanism. But I think overall you're right that hidden within the text, not written down, but probably implicitly, and we may hear from Andrew Bailey later, explicitly, we'll start talking about fiscal policy in the fourth quarter, particularly as the job retention scheme, the furlough scheme, which is still supporting the incomes of, we think, about 5 million UK workers. What will be the impact of that rolling off at the end of October? That's the big uncertainty, and fiscal policy may have to come in a different guise to support household incomes in the fourth quarter and into 2021.